Excellent. So that concludes our last demo of the day. And to close things out with us, we're joined by Mick Oppy, the CEO and co-founder of Neural Payments. Mick, thanks so much for being here today.
Thanks for having me, Randy. I enjoy talking about innovation, and I love the story of credit unions. So I'm excited to kind of see what questions you're going to throw my way.
I love it. All right. So let's kick some things off with something good. Big or small, what's the best new idea you've seen in credit union come up with in response to this crisis environment?
So there were a couple actually that I really enjoyed. One that I thought was really fascinating was right as the lockdown happened, we had those stimulus checks going out. And we actually saw a credit union that wanted to be able to let people cash those checks. And the way they did it was using windows in the building and basically cracking the windows and creating a teller interaction via these open windows. And I thought, what an interesting kind of innovation, because someone had to go in and say,
Sure.
what if we just open the windows? And someone else had to be like, wait, the window's open? And so there was just, to me, like an exciting kind of little, hey, we needed to respond and we needed action. And something little like that. The other one that I loved was kind of similar, where loans were in process and people couldn't come in and maybe complete some of that loan paperwork. And we saw where credit unions used the drive-up windows as a way for loan officers to continue those interactions. So you could schedule a meeting, you could schedule your closings, you could come and actually complete paperwork via the drive-through in a way that, those have been there for quite a while.
Right.
But now we're seeing them used in a different way during this kind of pandemic. So I thought those were kind of neat little innovations that were just kind of quick. Someone made a decision and acted, and I love it. Yeah.
That's right. So Randy Smith and I were talking earlier in the presentation, and those are the things. It leads us right into this next question. We've talked about this before, but innovation doesn't always have to be a mission to the moon. It's like a series of those smaller steps in the right direction can add up to a huge change. So talk about that a little bit.
Yeah. So I think innovation is the willingness to ask questions that may seem obvious and then willing to act upon those questions. So I think it's okay to have a goal of the mission to the moon. And I think, in fact, that you should kind of put some big ones out there like, hey, we want to create a 30% or a 50% improvement in account openings over the next 3 months. How do we do it? The ideas that come out of that may be small steps. I think sometimes we think because the goal is big that the steps have to be big. And what we actually see is no, in innovation, just taking one small step and taking one idea and trying it, we can learn much faster. And then we could iterate and get to that mission to the moon. So I'm with you, Randy. I just think we sometimes get in our own way and we think of this big goal and then we get this big project. And I don't think that those two things actually have to be linked that way. So I think of innovation as little steps and the willingness to act. And you're going to hear me say that a lot today, that innovation to me now needs to move from conversation to action. I think that's what the pandemic has shown us, is we need to be willing to act on innovation.
Absolutely right. And not all innovation has to be these shiny new gadgets and tech. So what are some of the services or strategies that you're seeing financial institutions rethink?
I think there's some really cool ones around. We actually had a credit union here, for me personally, that I met within the coffee shop. The person from the credit union, we needed to talk shop. They actually met me in a coffee shop. And we figured out like, hey, here's what we could do or change my mortgage in a way that was, helpful for me and let them keep the asset. And it was a win-win. But it was convenient for me. It was on my time, my schedule in a non kind of bank environment.
Sure.
And we were able to get business done. And so again, I think it's this, it's just a matter on the non-tech side. On the technical side, I would honestly say that we're still lagging a bit. And I think that we're just in a difficult spot. There's so many places we want to adapt technology and so many places we want to latch on to some technology and maybe we're spread a little thin. And so it becomes a challenge there on the tech side, but I think we need to have that same decisioning and action on the tech side as well. Let's make some decisions. Let's take some leaps here. I think that, again, the pandemic has given us some more grace or freedom to try some things, and it's up to us to respond.
That's right. That's right. So we've obviously learned a lot about social distancing in the recent months, and how are we going to define and manage member relationships in this new environment? Is there a way to somehow make digital seem closer and more personal, not unlike your coffee analogy?
Yeah, no, I think we have to. I think that's what I get passionate and excited about in the credit union space is the relationships. And I think that it is our opportunity and kind of our advantage is that we are about those relationships. And so I think we do need to take this moment to say, how can we improve the experience? And I think for the last, for me, it was fun to watch these branch transformations where we tried to, we put a lot of credit unions put a lot of funding into creating a new physical location. And I would argue that as the tech guy, I would be saying, well, okay, great. You did that the last 5 years. Give me a 5-year budget that looks similar to change the experience on the digital side, because we are seeing that. We are seeing that in other verticals where the experience is about personalization. And I feel like we in the banking space have just kind of lagged in terms of really jumping in there. And so I think, again, this is just kind of shined a flashlight on it where we're like, all right, now we need to do something, right? We've got to invest here.
Sure. So who has the best digital onboarding experience in any sector that you've seen?
What's really funny? This is going to sound probably, again, as the tech guy, I assume everyone kind of knows that I just love technology in general. So I recently purchased a routing, a Wi-Fi system for our home. And it was the little mesh thing. So there's multiple devices. It could seem overwhelming where it's kind of like, oh, you have to set these multiple things up. The experience was I could have let my 9-year-old do it. The wizard that walked me through it, that showed me like, hey, here's where we recommend you put the device. Everything was very crafted to make sure that it was easy, that I could just look at a screen and go, oh, 3 choices, I'm done. Oh, 2 choices, I'm done. And I still think, I think about banking documents, or when I look at some of those experiences, like, well, how much can we put on the screen? And we've all been there. Right?
Yeah, absolutely.
So for me, I think there are these other verticals where it was like, oh wait, they've taken something as mundane as plugging in an electronic device, and there's an app around it, and I can only manage that experience via a mobile device. There is no desktop version. So I also found that fascinating. Was we're beginning to see experiences where the desktop is almost left out, and it's like, no, we're just going to focus on this mobile experience, which if that trend continues, it would radically change things, I think.
Certainly. All right. So you're a payments guy. Let's jump in there. We've talked about Interchange and the drastic reduction in recent months for a lot of reasons, and essentially a race to zero. What are your takes on the root causes, and maybe what's around the corner as well?
Yeah, that's interesting. And we need to be careful here, because this is one where you and I could spend a lot of time. I know this is a topic we both love. Some of the root causes are the tension between the ecosystem, the payment rails and the ecosystems that are there, and wanting it to stay the same. And wanting it to stay the same, the merchants have to stay happy. And one of the merchants' biggest gripes is all of those fees that come into play in that ecosystem. And so you have this tension around, well, how do I keep them happy, but also keep this income stream coming through the rails, that makes Interchange, vulnerable. Everyone's taking a hit, or someone's got to take a hit. And so it exposes that. Now, the pandemic obviously changed the types of transactions we were seeing and what people were willing to do to make sure people could get transactions done. So we saw a hit there. But I think the root cause is honestly a lot of that tension around kind of what we consider the norm in terms of payments, and what the merchants are trying to do. It is a cost to them. And so how do we lower that cost on a transaction level? And then you insert all these other agendas. So now you add everyone in the payment rails, and they have kind of their take on it. And this is what I think creates just for me, a very exciting thing, but a very convoluted space that we're going to see again over the next couple of years. Like you're saying, I think Interchange is very vulnerable over the next 24 months to 36 months.
So with that around the corner, how do you advise a credit union to adapt and maybe even retool?
Yeah, I think that's what's interesting. So I think, you know, we talked about top of wallet for quite a while, for a long time. And I think that has kind of gone out the window a little bit, or out of focus. I think it needs to come back a little bit. I think you'd be surprised at the number of credit cards that are not my credit union's credit cards that I'm making transactions on. And what are you doing to get that transaction volume back? So some of it is not just that we're seeing an interchange shift, but you actually might be seeing a throughput shift. And so what are you doing to protect that? How are you incentivizing members to use your tools? Because if not, that Apple Card is really simple to use and it's a simple interface. So
Right.
what's really gonna get me to switch cards? I think that debate has to continue. So I don't think we should give up on interchange. I just think, at least in the credit space, we should be really looking at how we are driving transaction volume, because we still have that for now. I think the other one is, and I know we'll probably talk about it a little bit more, but I think the non-interest recurring revenue needs a revisit, because as we race to zero, which I'm glad you're willing to say, we need to begin thinking about how are other industries making, you know, their subscription models, right? So subscription models are the norm. I feel like we in the credit union and the financial institution space need to begin finding this willingness to pay for services and what those services are. And I think too often we try to align those with traditional things that have been commoditized, like trying to reintroduce a bunch of checking fees. Yeah, exactly, right? Can you imagine if that's not the innovation we're looking for, just so we're clear.
Right.
But I think members are, and I am willing to pay for some of those. So I think it's beginning to look at those. You know, an example I would give you, Randy, is on that mortgage discussion. The whole reason that the credit union was willing to meet was they wanted to keep my home, my asset, on their books. They wanted to keep the loan. They didn't want to sell it off. And so they actually were willing to lower my mortgage for me with like a 2-page addendum, right? Like a real simple thing. But it was awesome, because then I didn't go shop my loan. And they kind of knew I was probably going to go shop my loan, right?
Sure, everybody
That's really
is,
neat.
right?
I would tell you, as a consumer, I probably would have been paying, like if you said, hey, Mick, it's $5 a month, and we'll monitor this. If there's ever such and such a gap, we'll automatically amend your, you know, like, I get that there's revenue at risk, but the risk of me leaving is larger than maybe taking that subscription fee up front. So could you do a program that, I just think there are areas where as a consumer, as a member of a credit union, I would be willing to pay for your services. We just haven't done enough ideation around those new ones versus just trying to beat the old ones up. Checking, overdraft fees, NSF, right? Like that growth is limited. But the model is there, and I think the consumers are ready to take advantage of that model. Just so you know, the subscription model is by far working in every other vertical.
It has for a long time. So let's pivot a little bit. What works so well for Venmo, and how did it become a verb so quickly? My daughter doesn't say PayPal me. She says Venmo me. So how did that
Venmo
happen?
me?
Yeah,
I think that one's interesting. You know, part of it was right time, right place. So, you know, they introduced that public feature with emojis around payments, something that we all would have in the traditional space would have been like, whoa, you're going to display payment information publicly, like just put it out there? No way, not happening. And so I think they kind of embraced that, the social kind of growth we were seeing at that time in social media. And so I do think there was a right time, right place for them. And then the feature around communicating around payments, conversations around payments, really did put them, like, created a fun interaction. And I think that's really what kind of rooted them in their fast growth model. It is interesting that they're kind of the only one that's a real verb at this point.
right.
And we do on the neural payment side, we're doing a lot of studies around, is that a thing now? Is the brand, do you have to say PayPal or Zelle? On our side, on the financial side, feels like a lot of people feel the need to say Zelle. But the question is that reality, or is that just perceived within the community itself? But I think Venmo is really right time, right place for social.
Yeah.
And then they disrupted by saying, put an emoji on it. Don't just say tacos, put a taco.
Or heart.
And then make it, and then make it social.
Sure.
And I think what's interesting is, we pay for music lessons for one of our kiddos via Venmo. That's how the instructor takes payment. And so I think there's opportunity still, even in that space, where, we're missing out.
Yeah. Well, what's next? We talked about a little bit of the interchange earlier, but what's next in contactless technologies?
I think it's the merchant catch up. The merchants are finally, I just was in a restaurant for the first time in quite a while, and they had upgraded their terminals finally. And they were they had swipe only. So they weren't even in chip. And now they have these new terminals that are both tap and chip. And so I think the merchants are now they're finally catching on and getting these, more advanced terminals. And we're going to see a re-education on the consumer side then of tap and pay, because contactless, truly being able to just walk in and tap, really does open up the digital wallet experience that we've been waiting for again, 5-6 years now, it feels like.
Sure.
But the terminals are finally starting to catch up. And I've seen it in, 3 or 4 locations in the last 2 months here locally for me that, up until that point had been swipe only. So I think we're starting to see that shift finally, which is great.
Yeah, for sure. Well, if so much has become commoditized in financial institutions, what products or services will it take to keep our members engaged?
That again, when we come back to the goal, I think this is the challenge that we should be issuing today is, if you guys want to innovate, this is where the energy needs to be spent. The mission to the moon is, what services are you offering and why? And how do I make a digital experience that draws in people? You have the relationships. So now create the experience that really leverages that. I think that's where we've got to start really using what we learned in this pandemic of no idea is crazy, right? Open the windows and let's serve our members. There are digital opportunities with fintechs and internally that we got to begin to take some chances with. And that means throwing out this is how we do it. This has been a revenue stream.
We've always done it this way.
The classic things that we've all heard. But now you've seen when you act that you do get the response. People do respond when it's like, hey, you made a decision, you acted, and it was to the betterment of the member, and they responded well. I think we have to do the same in innovation right now. We have to be willing to say, hey, we're going to meet you where it's convenient for you. And we got to look at these other experiences that are non-financial, that are winning, and saying, I want that experience in my credit union. Right. We were willing to put coffee shops in our credit unions. Why aren't, we've got to be willing to really stretch our digital boundaries now.
Sure, for sure. It helps on the when and where. Meet them when and where they want. And sometimes the only way to do that is digital. So let's do.
It really is, right? I'm with you there. Randy, that's the tough one, right? The digital, what this exposed was, although we did this great in-person engagements, we aren't meeting them at the convenient place for the digital experience. And I just think we got to get there.
Yeah. So let's do some fun lightning questions to wrap this up.
Ooh.
This was a lot of fun when we did it with Randy earlier, so I'm looking forward to it. What's the smartest thing any credit union or bank has ever done for you?
The one that I just had, allowing me to change my mortgage with a 2-page letter and meeting me in a coffee shop to sign a paperwork. The greatest thing I've ever had. Awesome. I won't move my mortgage. It was just so convenient, and it was helpful to me. I was going to have to go do all this stuff. and they
Yeah.
just made it go away. It was
Oh,
awesome.
that's great. Name
Yeah.
just one name, the most innovative company in your world right now.
Well, I mean, selfishly, I'd like to say my own. Uh, you know, wow, the most innovative company right now. Man, that's a within financial, or I can pick anything.
Any company.
Ooh. Um, yeah, again, it's probably because I just talked about it, but that Wi-Fi experience, I was as much of a tech guy as I was. Um, this TP Link is the company that it was. Their digital experience was by far, and I'd looked at Google Wi-Fi, I'd looked at all these other kind of providers out there, and had done my homework, but the experience blew me away.
Is your Wi-Fi exponentially better now?
My wife complains a lot less now, which means I had to make it better.
All right. So to complete these sentences, fintechs are.
Fintechs are ready for engagement with credit unions. I think we need to really spend time doing the reverse and getting credit unions connected with fintechs. And I know that's overwhelming. I know that's a challenge, but we've seen so much money invested in fintechs. We can't say all of them, 100% of them are not actually adding value. They're all competitors. There are good fits for our members, and we need to find them.
Yeah. All right. Here's the next one. Digital onboarding is.
Woefully behind. Is that allowed? Is that too strong?
Sure. Millennials
I mean,
are. How?
I still feel that. Sorry, I could spend a lot of
No.
time on that one. But yes, I think it's woefully behind.
All right. The next one. Millennials are.
Willing to pay for services. If you will find the right service, we will pay for it. That is what we know about millennials. If it's
Exactly.
convenient and you provide me a value, I will pay you money for it.
Exactly.
Hands down.
Next one is Gen Z wants.
Simple, convenient. Simple and convenient. And digital. I think Gen Z is not the loyalty, and we've talked about this before.
Sure.
I know within NAFQ conversations that Gen Z is at risk because they don't know the message a lot of these that the credit union kind of story brings, and I feel like we're missing out on them. And so they'll use other services, right? They're looking for, if the service fits their need, they'll sign up for it and they'll give all their information to do it, right?
Sure.
So there is a willingness, almost a trusting in technology, way more than any generation before it.
Yeah, for sure. So last one, the successful credit union of 2021
will act. So they will find a way to act on innovation. They will no longer be, the number of conversations I have, Randy, and I'm sure you have as well, where it's like, well, we don't tend to be first. We tend to follow, kind of watching. I don't think we can continue to do that, to be honest. I think if you really want to grow your membership and be successful, we're going to have to see decisive action. And I think that is the only way to innovate at this point.
Yeah, great answer. So last parting thoughts, what's your biggest wish for credit unions in the next 12 months?
I'm such a big believer in the credit union story. I think you know that. I'm hoping that through this, we will find a way. Look, what we've seen with the pandemic are local actions, credit unions being involved, not just kind of sponsoring an event, but being in the middle of these events. And so the community response that credit unions can bring is unmatched, right? You won't see that with a large banking, but we have that. We have that ability. And so my goal or hope is that we're going to take advantage of this to get our story out there now and to show these communities that not only are we a part of your community, but we provide great service. And not only was that physical service that we provided, you showed up at our branch, but our digital experience is also really exciting. And therefore you should trust us and lean on us for your financial needs. That's my goal, right? Anything we can do around that, I'm in.
Yeah, that's right. I agree. So Mick, once again, thanks so much for joining us for this event and helping us close out with a super fun and informative conversation as always. It's great talking to you. So thanks again for being here.
Hey, thanks for having me. I appreciate this day. I appreciate, as a fintech, I appreciate the opportunity to kind of see what your partners are doing, to see how credit unions are responding to innovation. We're excited to bring our solution to market. We're excited to see credit unions now really push and innovate with these, I'll say missions to the moon, but with baby steps and action. And man, hopefully we can be a part of that. And thanks for the opportunity to kind of hang out with you today, man. I always appreciate that.
Excellent. Thank you.